Good morning, everybody. Welcome to our morning volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer, OptionPick.com. That handsome devil there is Mark Sebastian. He is co-founder of the company, and actually he's a founder. Our Saturday class, long gamut owning premium, is I think it's it teaches you really why you want to buy premium, besides just buying calls and watch the stock go up, which works sometimes, for sure. But a little more strategic way of thinking about it, especially with VIX now in the 10 handle, or maybe it's creeping up to the 11 handle. So, again, if you are a gold member at OptionPin, okay, which is a very reasonable price for our course, you actually get everything in our store. Access to everything in our store. You also get literally hundreds of hours of educational content on specific trades, trade ideas, trading positions, opening, closing, managing trades. Probably the best deal in education around. Plus, you get 3 months of Option Pit Live with it. So if you want to do some learning about options, try our gold course. And with that, talk about the Marquito. 2298. I don't think we quite got there. I don't think we quite got over 2,300. It seemed like it took forever to get to 2,200. We hung around 2,270, and now we're moving the other way, ever so slightly, 0.1%. So I would say the most marked thing about this rally is, let's just look at a 2-year chart of realized vol here. Get rid of the implied. Right. We have gone on a sustained run of low vol. We had that little period here. Okay, market dead flat. Remember, we couldn't get over that 2,200 level. We finally did, only to be, election and now woohoo. So again, a big part of the gains have happened right after the election. That's what it is. It has been accompanied by very low realized vol, which in general is kind of a bullish thing. There always can be something to turn markets around. However, at least for now, investors are betting with their dollars, and that's what we have. So the one thing that you can see, though, is sort of, let's take a look at some stocks. Let's say let's just take Google, for example. What I'm kind of interested in is not old highs, but new highs. Right, so you have a stock like Google. It is, okay. Right. So this next earnings cycle today, is this going to be new levels for Google? It's already made some pretty impressive leaps. Unbelievable for the size company it is, but it keeps generating growth. So what you're looking for is, are these internet properties going to continue really, right? This is my kind of closet long for the year, where Facebook, I think, is a fully valued company. It doesn't mean it can't go up. It probably will, but it ain't cheap on a multiple basis relative to Google, and they have very high market caps. But I honestly think this is still and will be the market leader for a while. They're in everything that's the internet. And if we want to see higher prices in the Qs and the NDX, it'll be led by stocks like Google, followed quickly by Microsoft, which is fashioning itself as a kind of an internet cloud company with software coming through the cloud and everything else. So they found another way on everybody's phones after not getting it right the first couple times. So you see growth here in these two things. That could bode well for the Qs. That could bode well for the SPX. Financials are still moving around. Looking at just like a smaller financial, it's hard to believe there's still room in these stocks, but they don't, they're all kind of catching a little wind from their just recent highs. Those could be, I think, wheel trade candidates. And as far as up new highs, we're going to need a little help now from oil and oil exploration, all the big energy companies to start kind of getting a little kick. That's what really can drive the S&P 500 higher, because you've had help from financials. Technologies are kind of at their higher levels, so you're going to need something to make, some part of the market that's still kind of not performing great, or kind of getting off the basement. You still have, if you look at, yes, it's back. It's definitely right. Not in the basement anymore. Not even here. But it's climbing out of the hole, right? So we'll see here about oil at this level. These could potentially be wheel trades as well, because things seem to have stabilized. And trying to think $50 oil for these. I know. I think it's in the bottom, right, Giovanni? Just it's extremely, extremely low volatility. So the penalty for buying stuff here, even a risk reversal will try to price some of these. It's just not a lot, right? It's not a lot. But I also think at the same time, you're starting to see oil prices and things sort of stabilize, which kind of stabilizes this whole group. I still think little banks, regional banks, housing, and really looking for technology earnings to push us higher. If they're pretty good, a little better than expectations, we could see something new. Also, as far as Apple goes, we need to see growth. We see any growth? All of a sudden, sort of the highs that we saw, the mid, like the low 130s, could be possible again if it gets back on the growth train. So again, same story. You get the growth, we'll get higher prices in the Qs, we'll get higher prices in the S&P 500. And I think since the interest rate thing seems to have subsided, as far as there's a path for rates. Now it's just, our company's going to start generating some dollars. Last but not least, I would say, as long as the market still keeps doing what we're doing here, I'm still looking at short-term trades in VIX. Anytime I think you get the futures rallying a little bit, it's probably a fadeable rally. We'll look at ways to set up strangle, short delta strangle, stuff like that. Anything we can do to take advantage of where the volatility is. The lower VIX gets, the more expensive the futures get relative, which there are some opportunities. You can learn about that in our Vol Master class, or just come to Option Pit every day in our chat room. And with that, I will see all of you later.